With Tesla going to the moon in October 2021, how long before they become bigger than Apple or Amazon? And if so, how long will it take to become a $10 trillion company? Welcome to Making New Money, a channel dedicated to exploring the innovative ways people are investing their money. We'll look at IPOs, cryptos, innovative companies, problems that are worth solving, and ask what's the next big thing. In this video, we'll lay out the arguments for why we think Tesla will or won't be the first $10 trillion company and seek to ask, is Tesla still a good buy today? Let's kick things off with the importance of founders and leadership to set the mission and philosophy of the company. Tesla's CEO, Elon Musk, is a serial entrepreneur who takes a first principles approach to solving problems that matter to the world and all its citizens. Whilst he may not have founded the company, he's been the driving force to overcome challenges and catapult it into the exclusive $1 trillion market cap club. Elon, a true engineer's engineer, makes for an unconventional CEO by conventional standards, but it's exactly the quality that attracts the brightest minds to apply to work at Tesla, or the legions of fans that defend the business and its mission to accelerate the world's transition to sustainable energy. The founders' or leaders' motives, character, and conviction are all critical when assessing the focus of a business and its ability to handle adversity. Elon, being the face of the organization, has steered it away from the verge of collapse more than once whilst enduring great personal and professional ridicule from the media, selling fear, uncertainty, and doubt.
Did you expect them to cheer you on?
Certainly hoping they would.
What are you trying to prove to them?
What I'm trying to do is to make a significant difference.
However, today, it is well positioned with capable personnel, a pioneer in its markets of operation with clear growth roadmaps for execution, even if it has to do that without Elon at the helm. That said, there's a strong case that Elon is vital to push the envelope if they're to reach 10 trillion first. Some investors may agree, Tesla needs Elon more than Elon thinks Tesla needs him. Innovation is the beating heart of success, and few companies do that any better than Tesla, having set its sights on the triple crown of innovation: transport, energy, and, as announced on AI Day, robotics. Together they form the bedrock of civilization today, and tomorrow's potential. Attracting the world's best talent to Tesla is the single most important catalyst to drive its success. Leading engineering graduates aspire to work at Tesla or SpaceX. This harvesting of the brightest minds in the world will eventuate in technological breakthroughs. The advancements shown at Battery and AI Days are examples that further attract more talent, which in turn produces more exciting development, creating an endless flywheel of innovation. Next up is manufacturing, also known as the machine that builds the machine. Elon has referred to manufacturing as the single most important differentiator for Tesla in the EV race. The application of first principles in the design of the gigafactories in Shanghai, Berlin, and Austin are proof that this business is nimble and unburdened by traditional ways of doing things or the not fear of making mistakes. The advent of the Gigapress to further hasten manufacturing of the Model Y, as well as reducing cost, improving efficiencies, speaks to the mantra of the business: the best part is no part. No other car manufacturer is targeting vertical integration as aggressively as Tesla. In a decade from now, it will seem obvious: if you control all critical parts of manufacturing, you're in control of your production destiny. The manufacturing prowess has the potential to produce a best-in-class product offering across major car segments. This is headlined by the $25,000 Tesla as shown at Battery Day and the eagerly awaited Cybertruck. Once Tesla has the means to scale manufacturing with all 4 gigafactories fully ramped, they will have the ability to produce enough cars to meet customers' needs across all segments. Turning the attention to the solar energy business, this is the Kraken that has yet to be really released. Tesla's commercial and residential offering has the ability to disrupt energy production, storage, and distribution, creating an untapped market potential. Megapack and PowerPack provide commercial enterprises and governments a giant battery designed to change the way we power the world, with clean energy, at an enormous scale. Whilst the Solar Roof and Powerwall allows consumers to reliably generate and store energy for their daily needs and offload the surplus to the energy grid for income. Once Tesla gets this side of the business going, they have the potential to unlock revenue streams that will rival the auto side of the business. Finally, AI and robotics. Investment into this hotly contested sector is pouring in, attracting the attention of Apple, Google, Meta, and others. Referred to as the third revolution, this has the potential to change every aspect of our daily lives. Witnessed at AI Day, Tesla's robotics division might be in its infancy, but disrupting human labor economy-wide will likely be a game-changer. This alone has the power to fuel Tesla for decades to come. Today, arguably, the biggest advancement in AI is Tesla's vision-only, full self-driving, also known as FSD neural network system. With the rate of accumulation of self-driving data and interpretation via Dojo neural networks, Tesla is on track to crack FSD first. Pair it with scaled manufacturing and a fleet of robotaxis could flood the streets. This would forever change people's transportation choices, disrupting the transport industry like never before, and along the way unlocking gross margins that would make even Apple blush. For keen index investors, Tesla might be the best full-stack ETF in its own right. The meteoric rise of Tesla can be attributed to Elon Musk. However, his true ambitions of colonizing Mars, to preserve the light of consciousness, may conflict with Tesla, leading some to question, how invested is he really? And the events that took place in early November 2021 literally shed light on that matter. First, recent SEC Form 4 filings indicate Elon Musk's trust sold almost 3.6 million shares in Tesla, worth around $4 billion. He also sold another 934,000 shares for about $1.1 billion after exercising options to acquire nearly 2.2 million shares. This is close to $5 billion worth of Tesla shares according to filings with the U.S. stock market regulator. Elon has also tweeted many times that Tesla's share price is overvalued. This all seems to coincide with Elon's tweet about selling half his stake in Tesla to pay tax bills. Even though he was scheming as early as September to do just that. If so, this might have been an elaborate stunt to garner positive public sentiment towards him, given the waging war on unrealized gains to be taxed. Amidst all this, it's been revealed his brother Kimball Musk, a sitting board member of Tesla, sold $109 million worth of Tesla stock, days before Elon's Twitter post. The second event that happened in the same week was Rivian becoming the biggest IPO of 2021 to date. As a side note, we will be doing a full analysis of Rivian in the next video. For this reason, in our opinion, the number one issue facing Tesla is the growing competition from both traditional and startup manufacturers. Yes, Toyota, VW, GM, Ford and the like are late to the electric scene, but they are catching up fast by aggressively expanding their research, development and product lines to cater to the electric car market. This ranges from SUVs, trucks, supercars, to premium luxury and mass-market hatchbacks. Traditional car manufacturers are already well established, have governments and unions on their side, and with growing economies of scale, they are closing in on Tesla's lead. Then there are the new challengers. Electric startups. Rivian, Lucid, NIO and Rimac, to name a few, are closing the gap on Tesla in terms of battery tech, range, design and build quality. They may not have the scale of Tesla yet, but the growing green EV wave will only attract more capital and competitors, which means Tesla will not be the only game in town. Speaking of China, it will be a crucial market for the immediate and long-term future EV adoption. NIO, being a national champion and co-owned by the Chinese government, has the incentive and financial means to support its growth. This patriotism towards NIO bodes ill for Tesla, as the Chinese government may incentivize their homegrown brands with subsidies. This would impose significant challenges for Tesla to appeal to the discerning Chinese consumer. Furthermore, citing privacy and national security interests, Tesla's FSD-powered robotaxis may be banned, imposing a significant blow to the earning potential of Tesla in China. A lot of investors' inflated valuations hang on the promise of Tesla's FSD technology. This too faces significant competition by way of Silicon Valley, with Uber, Google's Waymo and potentially Apple's own autonomous driving ambitions to enter the EV race by 2023. Further, chipmaker Nvidia recently announced advancements in their own self-driving technology, giving traditional automakers the opportunity to outsource and compete with Tesla. Competitors working together and converging from all fronts will likely pose a threat to Tesla's robotaxi business. They could monetize, replicating Tesla's own strategy by licensing it to traditional car manufacturers, making their own vehicles to have a fleet of self-driving taxis and eating away the juicy profit margins investors hoped for. Each way to monetize their FSD tech will impact Tesla negatively. Another area of concern is inflated valuations. Some analysts believe Tesla is way overvalued and is being traded on sentiments, not fundamentals. Currently, Tesla has a market cap more than all the other top car manufacturers combined. Charlie Munger, legendary investor and vice chairman of Berkshire Hathaway, thinks Tesla's share price is significantly overvalued from a fundamentals perspective. Other Tesla bears have stated the true price is worth around $100 based on fundamentals. A principal fear for Tesla investors is What if Elon decides to step down to focus more on SpaceX or another one of his ventures? Will Tesla be able to thrive under different leadership and continue to grow at 50% year on year? This is sure to send shockwaves to the stock price overnight. As a case in point, without Steve Jobs, Apple lost its talisman, visionary and key accelerator for growth. Still to date, it has yet to produce a meaningful product to succeed the iPhone. Government intervention via tedious rules and regulation may also stifle Tesla. This is already happening with Gigafactory Berlin's failure to launch on time. While in the US, the early seeds are being sown by the Biden government and bodies such as National Highway Traffic Safety Administration with the contentious appointment of Missy Cummings to investigate accidents caused by Tesla's autopilot. Needless to say, Tesla will need to dedicate more resources and personnel to validate the safety and efficacy of FSD beyond reasonable doubt. Further, any accidents caused by Tesla's FSD beta testing may prompt media calls to halt further beta testing. Finally, Meta, unveiled as the parent company of Facebook, WhatsApp and Instagram with a focus on the evolution of the internet or metaverse, could ultimately trump Tesla to the race to $10 trillion market cap. One thing for sure, whoever wins, AI will form the foundation of success. Other notable points to mention that could prevent Tesla from reaching a $10 trillion valuation are lawsuits. Tesla has over 1,000 active lawsuits in 2021. Secondly, delays on the Roadster, Cybertruck and Semi. And thirdly, potential product cannibalization on the promised $25,000 Model 2. Even though these are less dramatic, they can still have a profound effect on Tesla's valuation as it all affects its revenue and growth. External economic factors such as hyperinflation, supply chain issues and semiconductor shortages could all affect any company's growth, not just Tesla. It is definitely worth taking into consideration, but this will affect all other car manufacturers as well. So with all that said, what's your opinion? Is Tesla a good buy? Do you currently have shares in Tesla, and are you planning to hold, sell or buy more? If you don't own shares in Tesla, do you plan to? Please leave your comments below and don't forget to like, subscribe and hit the notification icon below so we can bring you more great content in the future.